Hello, everyone. Welcome back to the third ever NoBullEconomics podcast. My name is Danny, and I'm here with my co-host Damien.
Oh yeah, back at it again.
Oh yeah. And today we're going to talk about the state of the consumer. So Damien, what have you been seeing?
So essentially, what I've been seeing from most of the companies that have been reporting in their 10Qs, which is their public mandatory documents they have to report on, is that they're seeing that a lot of the consumers have starting to run out of their stimulus savings, which is, I would have assumed that would already been gone.
Yeah.
I was kind of surprised in the first place that they were saying they're now just starting to run out. I don't know the last time I got a stimulus check.
Yeah.
You?
No.
Yeah, so
it's been like over a year.
So that's one of the big things is consumers are starting to run out of their stimulus money, and what's that causing them to do? It's starting to cause them to run up their credit card debt, which is at almost an all-time high. It's over $1 trillion, which is starting to become a problem because interest rates are so high.
Yeah.
What were you saying they were at?
Credit card rates are at 21% right now.
Yeah, 21%. I think I did the math on that a little earlier. It's like $200 billion in interest payments just on credit cards, just on credit card debt. And J.D. Powers did a study, and it's 51% of credit card holders are now rolling over their debt, or what they call revolving debt holders, instead, compared to a 49% that are being able to pay off their credit card debt monthly, which is showing that the consumer has no money left to spend and they have to swipe their credit card.
And now we're starting to see a little bit of an uptick in credit card delinquencies too, which is never a good sign for the U.S. economy as a whole. So definitely want to keep an eye on that because they were steady low for a while, and this was obviously during the time when they were giving out stimulus checks and there was loan forgiveness, and they were giving you longer periods of time to pay back rent, to pay back student loans. So now's the time where it's all starting to catch up with the market. And I think when we looked, a lot of retail companies were hit hard this week. We saw a lot of red.
Oh, yes.
Macy's,
Dick's
Foot
Sporting
Locker,
Goods.
Dick's Sporting Goods. And then, just a whole bunch of retail companies.
And one thing is, credit cards aren't the only place that are kind of putting pressure on the consumer balance sheet. You have auto loans, which have also topped $1 trillion. And then, as Danny said, you have where they extended the payback period. You didn't have to pay your student loan debt for a majority of time since March of 2020. And that's 3 years ago. So for that amount of time, people haven't had to pay back that. They haven't had to pay a chunk of their paycheck towards that, and they could spend it on other things. They could be spendthrift, and they could go buy shoes from Foot Locker or buy things from Nordstrom or go on vacations. Who knows what they do with it? But now you're starting to see that as in October, once those payments have to be made, at least interest payments on the student loan debt, it could be a problem for these stocks even further. You have the student loan debt, the auto loan debt, the credit card debt. You're looking at about, I think it was $350 billion in interest payments alone, and that's a whopping number.
Right now, we can kind of see it's a bleak outlook going forward, but I wouldn't say the country's in panic mode yet because we have the economy's fine right now, but we're starting to see some of the tendencies that could lead to a recession in the future here.
No, yeah, I agree with that. The unemployment rate is still particularly low. It's I think 3.6 or around there, 3.5, somewhere around that nature. So people will still have the income. Wages are still pretty high. People will still have the income to hopefully keep up with their credit card payments. But as this crunch happens on them in terms of liquidity that they have with that, in terms of student loan debts having to be paid back, there's no more rent forgiveness, no more, you can get kicked out for not paying your rent, you have to pay back your auto loans. I mean, it could be a problem going forward, but for right now we're fine. And as you said, those retail stocks were getting hammered this week. The market in general was getting hammered this entire month. The NASDAQ, I think it's 3 weeks straight of losses. So
about
to be four. Same with the S&P. That kind of takes us into our next topic of discussion, and that's our stock game that we mentioned to y'all last time. So, Danny, you want to talk about how well you're doing?
Let's just say I'm not in the green. But the market's not in the green, so it makes me feel less bad.
Yes, the market is not in the green.
We did a little soft launch of our stock competition with the members in our company, and I'm ranked 5th out of 7th, so it's not great. But also, I did rush in putting in the companies that I chose. And
if you go back and watch the last video, which you should, it was a great video on commercial real estate, I tell you. But go back, watch it, and quote me word for word. Danny would be doing bad. I said that, and I think I'm right. So,
are you in the green?
I'm second. I'm not in the green, but I'm second. So you should go back. You should watch that. It was a great informative video about commercial real estate markets in general, and then you should also hear me say about Danny's performance. But besides that, there's some things we wanted to talk about in terms of the most picked stocks out of the group. We had Amazon at the top of the list, as you know, a big company, but as we said earlier, retail that could be harming them a little bit. You know, people may slow down in their buying, so people. Honestly, I feel
Amazon, you got to think during COVID took a humongous jump forward. So even in times of economic distress, they seem to be resilient.
That's what I was going to say. They're the cheapest service out there in terms of goods. You know, the economies of scale. People will go to Amazon instead of going to Foot Locker or Nordstrom. You know, I got Amazon shorts in my closet right now.
It's a one-stop shop for like everything you need. You can go, you can get
books. You know, I just bought 10 books from there. So
yeah, I mean, what they originally started off as. You're using it for its original purpose.
Oh yes.
That's what got you to second place loser.
Yeah, honestly. Then we got Tesla up there as well as the second most picked stock.
Extremely volatile company.
Yeah,
huge ups and downs. I have it in my portfolio.
I do not. I am not a fan of Tesla in the long run. I think that hydrogen is much better. Much better. You know, we'll stop wasting your time talking about Tesla as a company, honestly. But Wingstop is a big one. Me and Danny are very fond of Wingstop. They're looking at, I think, what is it, like quadrupling their store, tripling the number of stores that they have over the next few years.
They have like a huge amount of stores in their pipeline ready to be open, but the stock's been hammered in recent time because of the uptick in chicken prices and wing prices. Investors were weary and I think pulled their money out. So it's dropped from about $200 a share. I think now it's in around 160, 170 in that range, I think. Yeah.
And in terms of the least picked stocks, you know, there might be actually some unusual names here. And the top one is mine. It's Microsoft. Who doesn't pick Microsoft?
I mean, you picked it, but
that's a great company. I picked it. You know, I'm second. I'm not doing the best. You know what they say, though. If you're not first, you're last. So we'll see what Microsoft can do for me going forward. You got Yum Brands up there, another big in the food category, the accommodation and food services. Krispy Kreme, who doesn't love a good glazed donut?
That's true. We got Google, Alphabet, obviously, and then we have Lockheed Martin, which I chose.
It's your pick.
I mean, where I feel like there's a lot of military tension around the globe.
Oh yeah, that's a good long-term pick for the next couple of years.
Military, they produce a lot of military equipment and stuff the U.S. government will buy. So I think that one actually has potential, even though I had put it down in a haste. I probably should have taken my time, but that one I'm still happy with, and I probably would have picked it again. But
I agree. So pretty much in summary, Dan can't pick stocks. You know, that's a given. Neither can I. So that's a given. This isn't financial advice for any of y'all. Don't take our word on any of this. But you can be sure that there is a coming crunch on the consumer. It hasn't happened just yet. You know, the consumers are still in a good spot. I'm still in a good spot. Dan, you're still in a good spot?
I'm in a so-so spot.
Okay, you see, as you can see. And so I think that moving forward, the consumer is something to watch out on, especially when it comes to the markets. You know, companies only make money if we spend money. So if that's not happening, companies are going to be doing bad. The markets are going to be doing bad. It's definitely something to keep our eye out on. You got any last words for him, Danny?
I think the state of the consumer, which was the original focus of this video, I think it's probably bleak, but it's not an emergency yet. But I do think if we continue down this road of seeing people spending less money, retail companies getting hammered, then I do think it would be time to start to worry. So I guess we'll see that in the upcoming months. We'll keep you guys updated in the upcoming weeks. I would like to mention on NoBullEconomics.com, we post articles almost every day of the week, good informative articles that can help your investment decisions, can help you just become overall more knowledgeable on the economy and finance. I really hope you guys go and check it out. There's a lot of good stuff on there, so check that out. But other than that, I think we'll wrap up our third video. It's been a fun one. We'll come back to you guys next week with some new information, and hopefully all past aiming in our stock games. So we'll see.
Good one. Man, we'll see you next time, though, guys.
All right.